Hi, I'm Pattu from freefincal. In yesterday's video, we talked about how to enter long-term capital gains and short-term capital gains from mutual funds and shares in ITR2 or ITR3. Today, let's talk about how to read mutual fund or share capital gain statements and then create entries for short-term capital gains and long-term capital gains. Now, before we begin, I want to point out certain things. The capital gain statements from AMCs or CAMs or K Fintech, each of them will have different formats. Some statements will have a summary, some statements will have all the transactions and a summary. So you have to be a little careful about using these. You'll have to verify individual transactions. I'll tell you why you need to verify individual transactions. Also, these statements can have errors. Couple of days ago, I filed my ITR and I found an error in the capital gains statement from CAMS. So it's very common to have errors, and you will have to look at each statement, not just each statement, each transaction. I'll tell you why that is the case, especially for long-term capital gains. So let's take an example of a redemption. And this is a redemption of about 94,071 rupees, something like that. And the redemption was made on 4th of December 2021. 4th of December 2021, an amount of 94,721 was made. And if you look at the transactions for these, now I told you that mutual fund units are when you redeem, the units that you purchase first will be removed. Then the units purchased next will be removed, and so on. So that is the reason why you have so many dates. These are all the purchase dates, and this 94,721 rupees has been split into two. There is one 31,300 rupees and there is a 63,461 rupees. And if you look at these entries, this 63,461 rupees, they belong to short-term capital gains, and this 31,300 belong to long-term capital gains. So you will have to enter these separately, So the first thing you should understand is, when you look at the long-term capital gains, you must look at the purchase date. Where was the purchase dates on or before 31st January 2018, or were they after that date? So thankfully all of them are after 31st January 2018. So it becomes very simple. The long-term capital gains statement the entries become simple. Now the short-term capital gains has to be entered in a separate place. So now let's look at how to do this entry. So now this is the long-term capital gains, and we are going to choose after 31st January 2018 because you can see the dates are all 2019, 20 and so on, 2020 and so on. And here you don't need to provide any ISIN code, or the fund name or the share name doesn't matter. Now you have to find the cost of acquisition. How do you find the cost of acquisition? So to do this, you can see here, these are the redeemed units, and this is the unit cost. So you will have to multiply this into that, and add them up. So basically you need to multiply this into that, and you will get something, and then you'll have to take the sum of these rows, and that's going to be your total cost of acquisition. So that is 24,523 rupees, 0.59. Now this is the total cost of acquisition. Expenditure exclusively in connection with the transfer, that's brokerage or something. If you don't know what that is, just set it as 0. It means nothing. Just set it as 0. It doesn't matter. Full value of consideration is basically this 31,300 rupees. So 31,300 is the redemption amount. The purchase price for those particular units is 24,523. So the balance will be your capital gains that you will have to enter. Now I can give you another example of so before I do that, again the short-term capital gains has to be entered separately. So again you have this is the full value of consideration, 63,461 rupees. Again, if you want to find the cost of acquisition, you will have to multiply the redeemed units into unit cost and these entries and find the sum. That will be your total cost of acquisition. So that will be under the short term capital gains entry. So the total short term capital gains is here. If you sum this up, you will get the total short term capital gains. You can verify whether the ITR report, whatever they calculate and whatever you have at hand, matches or not. Now in my report, when I got the CAMS report, you can see this redemption price. This all the redemption, the total redemption was made on the same date, but CAMS had given these entries, the short-term capital gains, a separate NAV, redemption price. These entries is separate NAV. How is it possible? You are redeeming on the same time. This is a single redemption, so all of them will have the same redemption price. So that's the reason why I keep saying there can be errors in the statements. You have to be careful. Don't blindly upload it into some third-party software, or don't blindly give it to somebody else for filing. You will have to verify it properly with your own account statement and check, and then only you will have to file. Then this is another example, and you can see here this is a redemption made on the 4th of September 2021, and the total redemption amount is 1,89,408 rupees, something like that. And you can see both of these correspond to long-term capital gains, but one transaction was made on 1st of January 2015, that is on or before 31st January 2018, and another transaction was made on August 2nd 2019. This is after 31st January 2018. So this transaction within the red box, that is long-term capital gains without any grandfathering. This will be long-term capital gains with grandfathering. So this screenshot that I showed you here, this is after 31st January 2018. So this is long-term capital gains without any grandfathering. So you will have to basically take this, the corresponding, the redeemed units into the price will give you the full value of consideration. Then the redeemed unit into unit cost will give you the cost of acquisition, and that you will have to file that. Whereas if you go to this transaction, for this transaction you will have to select on or before 31st January 2018, choose the ISIN code of the fund, then you will have to enter the total number of units. Now this total number of units, you will have to look at the transaction. For example, if you see here, the total number of units is this one. The redeemed units is 1608. So this is only for the older purchase, 2015 purchase. You will have to enter the redeemed units, you will have to enter the unit cost, you will have to enter the cost of acquisition, sorry, you will have to enter the sale price, you will have to enter the cost of acquisition, and you will also have to enter the market value on 31st January 2018. That is available here. That is, you can see here the NAV as on 31st January 31st I don't know what, I think it's, I made a mistake. This is 31st January. I maybe when I wrote it down, I made a mistake. This must be, as it says, 31st January 2018. I've marked it as December. Sorry, it's 31st January 2018. That's the NAV, and you will have to enter that NAV, and that's how you file long-term capital gains with grandfathering. So the point I want to make in this post is that the same redemption can have LTCG and STCG. The same redemption can have long-term capital gains with grandfathering and without grandfathering, and in fact you can, a same redemption can have all the three: long-term capital gains with grandfathering, long-term capital gains without grandfathering, and short-term capital gains. So you will have to look at the transactions and separate them out and check. The summary will sometimes the summaries will help. These capital gains statements will have summaries of short-term capital gains, long-term capital gains, and so on. Sometimes they will not help. For example, the summaries may not give you the total number of units. If you look at this grandfathering case, they will ask you the total number of units that have been redeemed. That will not be available in summaries. You will have to dig into the transactions and check. So it's not easy. I know it's cumbersome, but that's how it is, and you'll have to get used to it.